Yeah, it'll be fun nonetheless.
Should I keep the drink in the cow?
I'm gonna, I don't think that would be too much.
You you don't think it would be too much?
I think it would be too much.
You think, all right.
Yeah. It's also a bull. It has horns.
You're right, actually. Yeah.
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 We're only, we're all bullish in here. Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on the beginning of December, week ending on
Yeah.
December 1st, right? My name's Ian Saunders here with Will Gibson. Will, it's good to be back here. It's been a couple weeks since we did the podcast.
Yeah, it's been a couple weeks. We had Thanksgiving, and then before that, we were doing a risk series with various other people around Nasdaq and externally. So I think it's the first time we've been internal peer-to-peer for a while.
Yeah, bounce around a little bit there, and hope everyone listening had a good Thanksgiving. Did you have a good Thanksgiving, Will?
Yeah, that actually reminds me. I need to get this out of the way. I've been talking to people. Are you a decorate for the holidays pre-Thanksgiving, post-Thanksgiving, for December 1? Because people feel passionately about this, as I've learned.
They do. I am a post-Thanksgiving
Okay.
decorator. Always have been. That's
Right.
just kind of how we did it. Other individuals I know feel very strongly
Oh, yeah.
about decorating pre-Thanksgiving, maybe
Uh-huh.
because of being influenced by friends on social media apps that we're
Right.
doing it.
Right.
But we're actually going to get our tree today, so we're doing a post-Thanksgiving, but not quite December 1st type of deal.
Okay. I'd ask just post Thanksgiving that's been a topic of conversation for people. They're like, oh, I've had my trip for 3 weeks.
Hey, you know what? The more the merrier. Might need to get a new one. That tree's hard tough to last for that long, I feel like.
Yeah, seriously, you
It must be
have to
easy to fix
replace
tree.
it.
You fake tree or you a real tree?
Well, we do a fake tree. I think Cassie would prefer that we had a real tree. She put live garland up in our living room. There's no way that makes it until December. I'm gonna be vacuuming like behind the couch for like 2 weeks.
I guess that's easier to replace than the tree itself, but
Yeah.
but enough about trees and garland and the holiday season. But yeah, definitely hope that everybody listening had a good start to holiday season with Thanksgiving and has a good round out to the end of the year. We certainly have had a nice November and a nice start to the holiday season for stocks. We're looking at a pretty strong return, at least at the time of this recording on the last day of November.
Yeah.
Market was kind of about flat, maybe a little bit down, but looking like a pretty strong month for most broad domestic equity indices there. So we were going to do something a little bit different today with the podcast. I think for today's podcast, we could always come in and look at different charts, but we were going to do it in a little different way. So we are going to have a mystery chart podcast, where Will and I have each come up with a few, or each found a few different charts that we've taken screenshots and hidden the name. And then we're going to see if the other person can guess what that chart is as we describe it. For those that are just listening on the podcast, we will definitely be just describing it. But if you are just listening, we do have a YouTube channel that has the podcast on there in a video format as well. And that will have all the charts that we talk about here actually up side by side, right?
Yeah. A lot easier to follow probably on YouTube.
But so we each got a couple charts here to look at. I don't know, Will, you want to kick it off? You want me to go?
Yeah. I can kick it off. I have one that's less exciting than the other, but I'll start with the less exciting
All
one.
charts
So
are exciting.
first clue off the bat. All right. I'm gonna share screen here, Ian, as you can hopefully see. And if you're following on YouTube, you can see this as well. So I'll give a few general points. We have 2 consecutive buy signals. Said security went all the way up to 96.50, so $96.50. Today, trading around 96. It was in a downtrend for most of 2023. The last time this was in an uptrend was in May. And then I'm going to leave it there so far recently back into a positive trend.
Okay.
And we can do like a 20 questions, but maybe make it like a 3 question.
Yeah, maybe not time for 20 questions. Podcast. Okay, so it's broke a spread quadruple top at 94.75, then moved back to a positive trend. It's a little bit overbought now.
Back to a positive trend in November.
Is this a stock or an ETF?
ETF.
An ETF. Okay. Yeah, it's tough. That could be a lot of different areas they're looking at.
We can give asset class clues.
Would we consider it strong?
No, not yet.
No, not yet. Is it something in real estate?
Not real estate. No.
Not real estate.
I do love talking about real estate.
You do. That would have been that was too easy of a guess. I'm gonna need some more help.
All right. It is not equities,
Not equities. Is it a commodity?
not a commodity.
You're picking a
There's
tough
about
one
one
up.
asset class left.
There is, so it's fixed income.
Yeah.
Um, is it, let's see here.
Ian's gonna start doing screens to try to find it.
I'm looking for it right now as we're talking. You've stumped me.
All
I'm
right,
not
it
in the
is.
fixed income space.
All right, it's just the ag.
Just the
AGG.
okay.
Yeah. So this is the ag ETF we're showing here. I'll jump to the next screen, which has the name, has some of the fund scores. You asked if it was technically strong, and I said not yet. Still has a 0.6 fund score. So
Okay.
for those that don't know, we have our ratings, 0 where 6 is the best for
Mhm.
ETFs, mutual funds. 3 and higher is typically acceptable. This is far from it. However, this has been a big topic of conversation so far in November. Rates have been coming down quickly. That's been helping bond investors considerably. So two consecutive buys. First time you've seen that since April of this year. Got back into a positive trend, as I
Hmm.
mentioned. It's also the most overbought that we've seen since July of 2020.
Oh wow.
Yeah. So overall, I think a pretty notable name for November.
Yeah, I would definitely say so. And that's that. The ag was not something I was thinking when I was sitting seeing consecutive buys, strong, but
Right.
quadrupled and back in a positive trend. Shows that we might need to be, or at least I need to pay a little bit more attention to fixed income. Maybe.
Yeah, I mean, people were, yelling about how the 60/40 is dead and all of these other things, but now your 60/40 had a great month of November. Stocks did well, bonds did incredible. So maybe trying to make a comeback.
Yeah, I think it was about this time last year when it was all that 60/40 dead
Yeah, it makes
stuff,
sense.
right?
I mean, it was a year of rates going up, stocks going down, which was just brutal.
Worst 60/40 return ever, wasn't it?
I think so. Yeah.
Yeah,
Yeah, especially on some like rolling basis.
right. That's yeah, certainly need to pay a little bit more attention to ag there.
All right, it's all right. Now it's your turn to stump me.
All
So
right, I'll jump back in. So let's see. Let's make sure I don't pull up the one with the name. All right. Here it is.
oh boy.
So this is for those that are just following along. We're looking at a long chart. This data going back to 2007 up to 2023. In 2023, we saw this security give 2 consecutive buy signals. First buy signal in February, triple top break, and then a second buy signal in May with a double top breakout at 28. Continued higher in a straight column of X's, topped out from a near term, current, I guess, 52-week high at the 30-50 point, which is right up toward the top of its current trading band. Pulled back in August, rallied back in September, pulled back in October, moved to a sell signal there in October. And then all that also moved it back into a negative trend. Since that time, it's turned right back around, rallied back higher, turned around right at, I think, the second day of November, for if that gives you any hint there, Will.
Second day.
At the 28 level, and then rallied all the way up to currently sit at a double top formation at 30, still in a sell signal, still in a negative trend, in a column of X's at a double top formation there at the 30 point.
So you said the 2nd of November is a hint?
Yeah, just timing perspective. So it
Timing.
moved sharply lower, gave that sell signal at a
Yeah.
near-term bottom in October, turned right back around,
Yeah.
and rallied
Alright.
up higher.
I'll ask them some of the questions. Is this an ETF or stock?
It's an ETF.
ETF. Is it within the equities space?
It is.
Is it in the international
It
equities?
is not. It's a
Okay.
domestic equity. I'll
Domestic
I'll
equity.
give you even a little bit more there. It is a broad-based domestic equity, but it's not. It's a. I don't want to give too much away. It's broad-based. It's a broad-based on a sector perspective.
Okay. Broad-based sector.
Yeah. So we saw
it-
it bottom out there in October. It's rallied up. It's overbought. It's at resistance.
Yeah.
And bumping up against the.
Is it one of the spider funds?
It's an equal weighted fund.
Equal weight. Is this
Equal
equal
weighted
weight
sector.
tech?
Yeah. Yeah,
Equal weight tech.
Equal
All
weight
right.
tech. All right.
Is it
You
QQE?
didn't ask as
EW?
many questions as me. but
Yeah.
It's RSPT. Equal weight
RSPT,
tech
alright.
from Invesco there. So for those that are just following along, looking here at the fund score, I mean 4.12 fund score. when you think about tech, you think about just strong, massive returns this year. The
Yeah.
RSPT is up 24.21% year to date. Pretty strong. Again, equal weight S&P sector fund, but it's on a sell signal and still in a negative trend.
Yeah.
That kind of shocks me when I look at the fund, and it's not, it just looks very different picture. It's a similar movement, but very different kind of picture than XLK, the cap weighted, right?
Yeah, yeah. Do you know what XLK is doing? I'm sure it's up more than 24 this year, right?
It's definitely up a lot more. It's up like 48.50 plus, I
Gosh,
think
yeah.
now.
Okay.
Yeah, I mean, you're overweight, like Microsoft's at a new all-time high like every day,
Yeah.
right? I mean, Apple's not quite at that new all-time high yet, but equal weighting those, I mean, everyone talks about the, I think it's at 7,
Right.
several of those are in tech, right? And so seeing that outsized effect that it has on the cap weight representatives, equal weighted out, still a strong fund score.
Yeah.
24% is not too shabby,
Yeah.
right?
Yeah. No kidding.
But it's not 50 plus.
Yeah.
That's kind of.
Yeah. That was, I definitely didn't expect you to go equal weight tech right off the
We
bat.
knew each other pretty. I was not expecting fixed income, and I went equal weight tech. So.
Yeah. So you think 30-50 would be a pretty convincing break here, maybe a bit more.
I think if you're looking at it, yeah. So I think if you're looking now, technology is doing pretty well. You're seeing participation broaden out a little bit. You're seeing more of the longer term participation readings move into back into more positive indications, like the percent positive trend that we have for technology. That just reversed back up with the recent rout, right? So you're seeing the strength broaden out, but you're seeing other stuff move in a pretty frothy territory. So you're
Right.
looking at this fund, it's at notable resistance at 30 from September. You have the resistance just overhead at 30.50. That's its 52-week high. Also at that's where the trend line, current bearish resistance line is kind of in place. And you just entered overbought territory at 70% plus overbought. So I think there's a lot of kind of overhead potential.
Yeah.
That could lead to a little bit of a pullback there. But I mean, at the end of the day, the stronger, longer term picture is a more important thing.
Cool.
Right.
All right. Good find. I'll take the reins now.
We're
Chart
I'd say
three.
we're 0.5 for 2. I'll give you a 0.5
A
there.
0.5,
I'm
yeah.
taking the goose egg
After
so far.
I got a lot of help. All right, here is my second chart. We are on 2 consecutive buy signals. It is getting close to its all-time chart highs. All-time highs are from August of 2020 at 194. March 22, we rallied 1 box below the all-time highs to 192. You got close to the all-time highs again in April and May of this year at 190. Since then, like I said, consecutive buys. In November, we're getting up to the 2023 highs and as well to the all-time highs. I'll give you one hint off the bat. This is a trust. ETF. ETF format. Yeah, fund.
Okay. It's an ETF or it's a
it's
ETN?
It has trust, trust in the name, but it's classified under the ETF umbrella generally.
Is it okay. Is it a equity?
No.
Commodities?
Yes.
Is it gold?
Yes.
What?
That's a 1 for 1. That's a full point.
Okay. All right.
Yeah.
Maybe 0.7.
GLD.
I'm bouncing back. GLD.
Yeah,
Okay.
yeah, GLD.
Nice.
So Spider Gold Trust. I'll share the full view here. Like I mentioned, two consecutive buys, banging up against like all-time highs. Pretty incredible fund score. I wasn't expecting gold to have 5.3 fund score.
That's pretty surprising.
Right now. Also extremely overbought, like a lot of pretty much like most areas in the market. Fixed income, a lot of commodities, tech, other sectors. Something interesting about gold, and I was talking to Joseph and I think yourself yesterday in the office about this, is that gold typically does well when rates come down. So rates have been coming down. So try to link the ag and gold together, both doing well as a result of falling rates. Something else with gold, though, is that it doesn't have a ton of economic use. It's not like copper that it's got a ton of widespread economic applications. Gold is typically pretty defensive, precious metal, a safe haven asset. A lot of people will describe it as. So it's interesting to see gold rally up to all-time highs, given what the rest of the market.
Everybody's just buying a bunch of gold bars and putting them in their safe, I guess.
I guess. Yeah, I mean,
what else can you do with it?
I would love to hear like a thought through kind of economic rationale for the move for gold here, because rates are still relatively high over the past couple of years. So could be a flight to safety trade. Maybe it's something more, maybe it's something less. Not entirely sure what to make of it just yet.
Yeah, I think another pretty interesting thing when you're looking at the chart itself, I think you saw it in 2020, got all the way up to chart 194.
Yep.
And then rally high in 2022 got up to 192.
Yep.
Rally high earlier this year got up to 190.
Yeah.
Currently, you're at 188. Each rally high that it's gotten to has been one box lower than the box before.
I was looking at that too.
Yeah, I mean, you just kind of see it consolidating towards has it been the same thing on the downside?
I don't know. I've been looking about
No, so it's been a little bit more.
a little more all
consistent
over
with
the
that
place.
50s levels. It's just finding some support there. And then that 170 seems to be pretty solid support from October of this year and from February, right?
Yeah, 170 definitely looks to be a big area of support. Overhead resistance is pretty clear on that chart as well. I'll be curious to see which way this breaks, if any. I think that could be big news for technicians for sure.
Yeah, absolutely. I mean, that's notable resistance though, as we continue to kind of look toward breaking out of resistance as being a positive sign, right?
Yeah.
I mean, it is overbought, like you said, but it's if it breaks out, it's kind of range. Only got a few more boxes.
I know. Yeah.
All right.
All right. Well, what do you got for me?
Let's
Last
see
one.
here. The last one, it will at least be easier to give hints for. So,
Okay.
all right, here it is. So we are looking here
Pretty.
at another big chart.
Yep.
Looking at movement mainly in 2022 and 2023. Started off 2023 rallying sharply up into February, got up to the 118 point, and then really just kind of been moving down into the right since then. Most recently gave 3 consecutive sell signals, bottomed out in the 80 to 79 point, and then again right at the beginning of November, not related to the last chart. That's for your first hint.
Okay. All right.
Turn right back around. I mean, most of the market kind of did that too,
Yeah,
right?
yeah.
Turned back around, rallied up, and moved back to a buy signal, moved to a positive trend this month. It's now on 2 consecutive buy signals. Recent pullback. I mean, that's not a bad looking kind of near-term picture.
Yeah, it does
there.
look pretty good, to be honest.
I'll go ahead and give you, this is a stock.
Okay.
This is a stock. So it's currently sitting at 92, pullback from its top of its trading band, broke those rally highs from May that's resistance from May and June, and then just kind of pulled back from that overbought territory. Currently sitting around 92 on its chart.
All right. So this is an individual equity.
Individual equity.
You said not related to the first big company.
Big name.
Big name. Okay. Yeah. Big name. All right. Is this in?
It's in the Dow.
Oh, it's in the Dow?
It is in the Dow.
Oh, man. Is it tech, discretionary? One of those two?
Shoot, I guess now it's communication services.
Com services? Is this Netflix?
No.
No? I don't even know. Not Netflix is in the Dow. That's going to show my index knowledge.
Yeah, big, long history.
Big, long history?
Yeah. It's one of the old long company, do a bunch of movies that you probably have been
Disney?
Yeah.
Disney.
This is Disney, DIS.
Dang, I didn't know. Chart looks kind of nice.
You know,
I've hated Disney for a while.
When you think about it, you look at Disney. Disney's a 2 for $5 from an attribute perspective. So it's still what we would qualify as like a weak name.
Yeah.
2 consecutive buy signals. Last time it did that was February of 2021 when it was at all-time highs. Was the last time it gave 2 consecutive
almost
buy
2
signals
years
during the whole stretch, right? I mean, you got a lot of chart history to go back. You're going all the way up here.
Was there some follow through?
Consecutive. No, I mean, it did that prior to that too, but the last time it gave 2 consecutive buy signals, it hit new all-time highs.
Dang.
And since then, it's just kind of been flip-flopping signal-wise. It's going to give them a lot of consecutive sell signals.
Oh, yeah.
But
I remember putting put recs on this in our report for months.
Probably made some money off of that
rinse and
over the
repeat.
last couple of years, right? But yeah, I mean, bottomed out there, 80 to 79 point, turn right back around. It's not a bad looking chart.
Yeah.
It's really not.
So what's needed to get this to a 3?
So good question. So it's currently a 3 or 2 for $5 from an attribute. For those that might not be as familiar, we rank stocks similarly how we rank funds, except the score is just a 0 to 5. And where there are 5 things that we look at. The first of those is being in a positive trend, got that back in November. And so it sits in a positive trend now. It's also still in a buy signal against the media sector. So that's its second attribute. The other three things that it could get: relative strength changes against the market, so either a buy signal or a column of X's, whatever I'd say first, or you need to see a column of X's reversal back up in the against the media. So it's right now its closest thing is obviously being reversing back up into a column of X's against the market. So if you're looking at the Disney versus the S&P equal weight, when we're looking at that relative strength chart, we need a 6.5% difference to get a new box, right? We're currently 2 boxes up from the reversal. One more box, we get that reversal. Essentially, is kind of where the RS value would look like on the chart. It was up. Disney relative performance to the S&P equal weight, it's been up 6% more than the market over the past month. So if it does that again in December, you'll probably see that tick back up to a 3 for 5.
That'd be notable. I mean, I don't think it's been a high attribute for years.
No,
probably.
And when you think about it, you just think about how poor it's been doing, right?
Yeah.
I mean, hard to keep up with what's bundling now. It's like Hulu, ESPN bundle, and then Disney Plus. Are they going to keep Disney Plus name, or Hulu has live sports? I see those commercials everywhere, right? But I mean, stock seems to be turning around a little bit, and we're getting back in a positive trend now. It's a better looking technical picture than I was.
That's a notable name. Yeah, we are Disney Plus subscribers for the month of December because all the Christmas movies are on there.
Okay.
So we'll be customers for a month. We'll see how it goes. See if it'll help the stock price.
Nice.
Well, that's cool. That was a good run through of charts. Definitely goes to show you what we were talking about before. The whole idea of technicals is that you cover up the name, you take away some of the company bias that you may have, or name recognition, or news, or whatever influences your opinion of the way a stock or security should be moving, and just check out the chart and see what's going on there. So I think both of us highlighted, at least I think the ag and Disney similarly broke back into positive trends, looking like they're starting to, come out of this like structural downtrend. Maybe we'll see. And then the others were banging up against big resistance.
Banging up against resistance, but names that you wouldn't have at least thought about as being like super
strong, right?
Super strong, or So I think it's interesting, right? I mean, that's the whole thing. Point and figure chart, you cover up the name, you can just get a read what it's looking like from a technical perspective. It's always a good reminder to cover up the name and just kind of see. Hey, if I didn't know this was the ag, if I didn't know it was Disney, what does this chart look like? Right?
Yeah. I mean, I was talking to a client today with people that have held a stock for 20 years or something like that because they just love the company, but it's been 2 attribute name, 1 attribute stock for 10 of those 20 years. So it's just that kind of endowment bias where they think because they own it's worth a bit more. They just hold on, and then you forego the better option.
Cheaper can keep becoming cheaper.
Yeah,
for sure.
Yeah. If you loved it at 20, you'll even love it more at 15.
There you go. That comes out to me.
Yeah.
Cool. Well, I think I mean we could keep going back and forth, but we got a pretty low batting average off of those charts already. I think where do we 1.5?
1.5,
1.5, 1.75. We'll get
better.
We'll get 50% next time.
Yeah. Yeah. Well, tell us. I mean, feel free in the comments or email us if you like this or you like some or you have some ideas for the podcast in this respect. We'd love to hear them.
Yeah, absolutely. Cool. Well, with that, we can probably sign off here.
Do it.
Good podcast, good roundup here to the month of November. We'll be back to talk to everybody next week for the month of December.